Friday, let me allow this market to go to my TP. So yeah. which which and I was not sad that day. I was still happy because it was a very clear
Set up. Yes.
market.
Yes. Yeah.
Yeah. And I took what happened in the market, but still it took me. It was later, I think in a 30, I think around 30 minutes or 1 hour time, immediately, although just my start side, I even passed that place and started moving up, buying. See if you get it now.
Yeah. Yeah.
Yeah.
It,
So, so like it is part of the process.
it's actually part of the process, though. It's actually part of the process, and you know that that trade that you took, you posted it on the group, and
Yeah.
that trade, they did not take out liquidity. You understand? They did not take out traders first. Now,
It does, yeah.
yes, you understand. So now I'll always wait for traders to lose first, like for other
Oh,
traders to lose first
yes,
before
because as
before
they
you
took me,
trade. You understand? If they don't lose first, then you will be liquidity for the market. So me, I'm tired of being liquidity to the market. I'm tired of adding liquidity to the market. You understand? I don't want to add liquidity to the market anymore. So that's why I said that inducement is good. You understand? Because it's actually a fake out. You understand? A fake out for uninformed traders. So they will lose first, and they will add their money to the market. Then plus the money that the markets have already, the big boys have, all those pension companies and all of those things. Plus the money they have, they will add. They will move. You understand? But if they don't lose, if other retail traders don't lose first,
yeah.
you will be the one to lose, and you'll be the one to provide money for the market. So I am done
Yeah.
providing money for the market.
Yeah, it's 100%. That's what I saw on Friday because the market, that market normally is a win trade. You understand? Because that's what the market told me to do. I traded with dominance. You understand? The dominance was like to buy.
It was GBP. It was GBP USD. Yeah.
No, it was SPS. I lost
SPS.
GGP. I lost two trades. That I placed two entry on GGP, then placed an entry on GU. It was GU that gave me $78, but I was not mindful of the second forces, the opposite forces. You understand?
Yeah.
Because as soon as I was mindful of the opposite forces, I could have collected that $78. It was, or I saw that there was a supply. It was later when I was analyzing it again. Then later I found out that there was a supply, a pending supply.
Okay.
You understand?
Yes.
So the market entered the supply zone and made the reaction and took me out.
Okay. So it was rejecting from the other distance. Yeah, I understand what you mean.
Yeah. So
Which setup was that? Was it around this place? Though this blue shaded part is New York session.
Okay.
Which day was that? Was it on Friday, right? It was on Friday.
On Friday.
It was on Friday.
Okay.
So it should be around this place.
I think. It will be around that on Friday, but I think around 12.
Around 12.
Whoa.
It will be around this place. I think it will be around here or something like that.
Yes,
On
around
15
this year.
On
Yes.
15
Okay,
minutes.
yeah. Yes. The thing is that I didn't follow my strategy.
Okay, you
This
didn't follow your
SPA.
strategy. Okay.
Yeah, this SPA because on normal my Fibonacci and my supply and demand must be in confluence before I take any trade.
Okay.
That's why I draw those lines. Those lines you see as if it's a support already. Those lines are my confirmation lines. You understand?
Yes. Yeah.
So, but this is me waiting for the red candle to touch my to make a reaction in my
That's the
zone.
Yes.
Yeah. Then either my green candle will touch that my 0.7.
Yes.
You understand? Right? Yeah. So that one now will show me that yes, and when it touch it and it's still making a very good reaction, going up to break my 0.68. You understand? Then that's when I'll say, that's why I confirm this market is going my side, because normally the direction was to buy.
The
So when I started
direction.
seeing that, yes, that the market is going buy, so I'll just place the trade and it to go.
Okay,
So
I
for the
think
past,
it was this trade, right?
yeah, that one good, yes,
So
yeah,
you wanted to take this demand,
yeah, I want to take that man.
and it
You
broke
understand?
through that way.
So I was like, so I start the man, you see it now. So,
Yeah.
but he didn't touch my, okay, he touched my 0.7, but he didn't cross that 0.68.
Okay, so your trade was something like this.
So I took the trade
Was it
from that
where did you place? Where
that
did you
pin
place
that pin bar.
Okay, this pin bar.
Yeah, that's where I took the trade, because I assume that that's my demand zone, which he tapped in and made the reaction. So I was like, okay, let me go aggressive, because since he thought that my demand, since he made that reaction there, the pin bar, yeah, the pin bar.
Yeah. So this was your trade. Okay, you.
Yeah, then that demand zone raised it to that place, it to that zero. That's demand zone.
Okay,
And
your demand zone was where?
yes, on that week, the green candle on the week.
The green candle like this.
Yes, yeah, that's why I put my demand zone.
Why?
So,
Why were you trading something like this?
I don't know why, because I was thinking, I saw a reaction.
You saw this candle reacting from this place, but this is not a demand now.
Sorry, bring it down to this green. Sorry, go take down. I think it was.
Yeah.
Yeah, I think something like that. Yeah. Yeah. But I know it was careless.
It was careless.
Yeah.
It was actually a very careless trade. Your emotions were dealing with you.
Yeah, it was a careless trade yesterday. So, so I entered. When you win, or not looking at, or not
Yeah,
talking
there is something that McDouglas actually talked about before. He said that if you're consistently, if you are in a state of aura, or if you are kind of feeling in an excited type of way in trading, you know, that you should be cautious, because you might have that kind of free type of mind that you want to do anything and thinking that it will go your way, because you are feeling that aura. It's feeling like you are not even thinking about the pain itself. You are just doing this because you are kind of excited. Your chemical distance on your brain is very, very excited, and you're just doing anything without considering the consequences, or trying to
100%.
take things that you know that is not right. On a normal day, you know that it's not right, and you are trying to do it because you are feeling too excited. That hour is there, you know. So it actually happens. It happens.
So the market, I was like, waiting, okay, since it went down, this red candle went down. I said, okay, see that since you have not touched my 0.7, that is this green candle. So I was waiting for this green candle to break that red candle.
To break this red candle.
Yes.
You're waiting for the break of this candle.
Yes, as when you break that red candle, it's going up 100%.
So now your trade was something like this. Your stop loss was around this place, right?
Yeah. So take that Fibonacci to the up of the structure you made up. Fibonacci should be at
this one.
Yeah, to the top.
To the top. Okay.
Yeah. Yes, somewhere. Yeah.
Do you know there's another thing that McDouglas talked about, or I don't know if it is him, but I've read it on a trading book, that sometimes you will try to make the trade, or you will try to make your setup, though it is not working, but you want to make it feel like, convince yourself that it is correct. You understand? Like you want to. It is not going like how am I going to say it now? That you're just trying to form the what you are trying to trade just for it to reflect what you're feeling. You want to take a buy, but you know that the market is not buying or it's not bullish. But you're trying to fit in something to make you get convinced that yes, it is buying, and you will be doing that thing wrong. Like you will know, but your conscience will be telling you that, see, bro, this is wrong, but you don't want to believe that it's wrong.
Sure.
You understand? So it's also those psychology, like it's.
Although that when I lost,
so it just went like this, boom, drop.
I just see myself. Bro, you see, it's just about you waiting, watching the trade.
Yes,
It's not about rushing. It's not about rushing. So
it's not about rushing.
I was like, I rushed the trade. I said, wow. So, bro, take time next time. Don't give money to the market again.
Don't give money to the market. Don't provide liquidity for them. Wait for them to pick out.
Yeah.
Don't provide money for the market.
Yeah. So, but normally I was like trying to end. I was trying to end my year, like the year for this year now, this December. First, that's on Friday. I was ending the year. You understand, with a win, with the mindset of a win.
Yes, now to enter 2024 with bloody distance. I understand.
Yeah. So I let that loss, but I never because before I come to the trade, I told myself there are two things involved: either you win or you lose.
That is true. So, there is two things involved in the market. You either win or you lose. There is no other thing. They don't give you a break even. You are not giving a break even. So you either lose or you win, you know.
Yeah. So I was like, okay. I was like, since I lost, I was like, oh, say I don't lose now. Say, one don't do that. I don't win, I lost. When I win now, I say, okay, I don't win now, I don't lose. So the one of them was happened.
It's true.
And one of them didn't happen.
It's true. Now one of them happened. Wow.
So they just say, I just learned from the mistake that happened. That Friday.
Yes.
And I told myself that I'll try to avoid all those things. Because I can't say that I won't because normally it can still happen. But I'll try to avoid it. I'll avoid it.
There is no way we are running away from losing a trade. Yes. There is no way. There is no way. It just to even do you know that sometimes cutting your losses itself is knowing when and how to cut your losses is one of the toughest things because when you know, I think before you lost this trade you must have realized that I'm wrong.
I was having that feeling that the market, in fact, I know that the market is going. I was like, leave this market. Let me just this market.
Lose this trade.
The one so the one was like, okay, you want to go my mind now, and I see the mind now. I just lost. But mind you, was that the money was actually it was. I placed two positions.
You placed two positions on this setup.
Yes, two positions. But the two position was $38. Okay, it was $19 loss.
Yes.
Sorry, $38. Sorry, $38 loss. Sorry, is it okay? Yeah, $38 loss. Sorry, $38 to get 60 something as profit, or one of two. You understand?
Okay, one of two.
So,
okay.
Yeah, so I was saying, okay, since because I'm willing to lose like $80 in a trade.
Yes,
I'm comfortable with that.
Yeah,
losing $80 in a trade, fine. You understand? So I was like, okay, since it's 38, I can add another position to make it 60 something.
Yes.
So because my target in a day is like $100.
Okay, your daily profit or your daily loss is $100. That's what you said.
Yeah. I can lose 100. I can win 100.
Okay.
You understand?
Yes.
Because that would just make that because I want to just make that as for now I'm still learning full. So I don't want to make that.
Okay, you just don't want that to just be your normal target.
Yes. So that let me know that okay, this is what I'm targeting.
Yes, and you know, I think I was doing that. I was actually doing that today. Sometime in the past, I was doing just $200.
So I mean that because I was saying that okay, because I was like, I have time to, because for now that I'm still trying to compose myself. You understand? I have to learn. Like there's some things that I've not learned. So far now I have to make the profit a kind of smaller for myself.
Yes.
You understand? To boost my confidence.
Yes.
I don't want to be taking 100 pips.
No. 100 pips is a no.
Yeah, so what I just want to just 10 pips, bro, it's okay for me.
10 pips. See, there's someone that said, there is one trader that said, he said 10 pips daily pays the bills. Like 10, he's consistently cashing 10 pips, 10 and less than. You understand? Maximum of 10 pips daily. That's what he trades. You know, so you know, like if you're consistently cashing that type of pips, you are okay.
Yeah, like Doy. I also studied Doy well.
Yeah.
Doy don't kill himself. He's saying I want to collect 20 pips.
No.
He just focus on that his 10 pips. Put like 2 or 3 positions. Get his money. Go right for that day.
Mm-hmm.
Go and do some chilling.
Go and do something.
Go and some chilling. And come back the next day and continue.
Come back the next day and continue, bro. You understand?
You understand? That's how it is. It's not about getting the whole. You want to get the whole money in the market. You can't get the whole money in the market. You understand? Just get the one. McDonald's always say, get. The market will always provide you with money, but it's left for a trader to either accept it or reject it.
That's true. That's just true.
Like yesterday, I told you the market gave me $78. Which it is left for me now to accept the money.
Wait, the market actually gave you some money and it was left for you to accept it or reject it. That's
yes. So I rejected the money and the market now, okay, since you rejected the money now, we are taking it out.
Yeah.
So after that day, I was just smiling. I was like, see what I don't know what I'm saying.
But it's true. It's true. Do you know that like some of the losing trades I've taken, I actually get more than I staked. You know, and sometimes when we are at the London Academy of Trading, one of our lecturers was saying, don't be a dick for a tick. You know, like we shouldn't be a dick for a tick. Like something like it will remain a couple of pips for the market to hit your take profit, and you're still waiting for the market to hit your take profit. You know, when it has already given you at least some. Yes, it is always good to wait for take profit, so it is very, very nice, you know. But sometimes if the market is just doing some kind of BS and all of those type of things, you know, like it is always good to just, but it is not that was what I say, like to use your hand, like to cut your trade yourself, you know, that this thing is not working, that you want to close it. Or that maybe you want to close it at break even, like maybe like how you were getting that 78, and you already know that maybe this thing might not work. You understand, something like that, to close it at break even, like it's a different type of psychology.
Yeah, I did that when I was trading that 5 minutes, and most times when I cut the loss, the market will just change direction. Or like ask myself, bro, is this market looking at you when I'm cutting?
Is the market looking at me? Why always me? Is it the time I want to trade? That's when they come.
So you know the kind of psychology, the kind of mind, the kind of like,
bro, have you asked yourself a question before that? Is this trading actually for me?
I've asked myself several times, but after saying that, I will still come back. I want to be making money from it. I'll be asking myself, no, that it is not them, it is not the market, it is me.
Yes.
Because if this kind of person are making this money, that means, and I'm losing this money, that means the fault is from me.
That's true.
Understand? So I was like, no, improve yourself.
That's true.
Then you make money.
That's true. It's just to improve yourself. There was something I was reading McDouglas' book today. There was one of the things he talked about. I've forgotten. I'll find it out. I'll search on it. But it's true. If you're because they said that the market is always right. So if you can't say that it is the market that did something, or I think I'll find that stuff. I'll find where it's written.
Is it on Trading the Zone?
Yeah. It's on Trading in the Zone.
Okay, I haven't bought that Trading the Zone, but I haven't read it for now. I just read the Discipline Trader.
Guys, read that book. I love the book. I want to read it again there.
Yeah, I have the book, but what I'm reading now is Supply and Demand.
Okay.
Yeah.
I would ask guys to look at something. And it's not my fault.
If you read The Discipline Trader by Mark Douglas, you will know that it explains everything how to be disciplined as a trader. And I also observed that discipline trader was his first book before he brought out.
Okay.
So I think that Trading the Zone should be a continuation of that.
That's true. I think he referenced that book,
The Discipline Trader.
The Discipline Trader. Yes, he referenced it. I think so.
No, maybe the thing is that like I just map out places that is very, very important. So I'm trying to write it down. But when I'm done writing it down, I will take a photo of it and send it to the group.
Okay. Look at what he said there. He said, Mark Douglas said, to me, losses are simply the cost of doing business or the amount of money I need to spend to make myself available for the winning trades. Like, that is why I've always said that to me, do you know that I see losses as redemption? Like, I see losses as like the death of Jesus Christ and we got salvation. You understand? Like, I see losses as that redemption, because it is from those losses that, bro, your body will be hot. Like, no one loves losing money, bro. No one loves, and it is those losses that make you. But sometimes some people don't actually learn from their losses. Me, I do learn from my losses. I do learn from my losses, and it is so, like, this thing now. I marked it in red. Like, it is. I know that it is losses. Losses are redemption, and it was actually those losses that made me.
Because Mark Douglas' book, The Discipline Trader, he wrote there's a topic, like a special topic that said the market is always right.
Yes.
Like, I read why the market is always right. It was like the market is always right because as a trader you're trading in a different environment. If you're going to club, you think like someone who goes to club. When you're there in that environment, you can't be thinking as a trader when you're in a club now.
That's true. But
when you come back to, that's how you see all these billionaires in trading. Whenever they go to club, they behave like people who goes to club.
That's true.
Whenever they go to that channel, they behave entirely like a trader.
That's true.
You understand? So
that's true. I was shocked when Doyle went to vacation. I think it was this weekend, last year or something like that, on his yacht, and he was carrying all these booty girls on the yacht. I was just like, are you like this, bro? But on trading floor, you just behave like a very innocent guy.
Yeah.
And he was on his yacht carrying one big booty.
If you're a rugged guy outside, when you come to the trading environment, you behave.
It's true.
So you have to behave yourself as a trader. That's why McDonald's will tell you, for your trading to be more effective, let your inner environment meet with your outer environment. So your outer environment is what you see in the screen, and your inner environment is you. So if the two are in confluence, then your winning strike will keep on going. Like, the winning and be going.
Okay, I understand what you mean.
Yeah. So but if your inner self, that's why most time when you stand, whenever you say that if you doubt the setup, then you not take it. You understand?
Yes.
At that moment when you doubt it, it's possible. The best thing for you is not to take it, because when you lose, you feel it.
Yes, that's
But if your inner self accept it and you take it and you lose. You not feel that you lost.
That's true. That's true.
That's
very, very correct.
That is how, and that's what you emphasize more on, that the market is always right. That do you want to know the cause of the problem? That the cause of the problem is you. You understand that the market will not give you.
Do you know you are very correct? There is another thing he said today. I mean, I read it from McDouglas today. He said the first step in the process of creating consistency is to start noticing what you are thinking. That is your inner self, just like you say, what you are thinking, saying, and doing. You understand?
100%.
Why? Because everything we think, say, or do as a trader contributes to, and therefore reinforces some belief in our mental system, which is your physical and your, just like you just said now. You understand? Because the process of becoming consistent is psychologically in nature. You understand? It shouldn't come as a surprise that you have to start paying attention to your various psychological processes. Like it is in confluence. I swear, like it is in confluence with what you just said. It is.
Yeah. If you that discipline trader now, the book you see where they write understanding the nature of the mental environment. This discipline trader here, it's all about mental, like your mental state, the environment you want to feel yourself.
Yes.
So if you read this book now, I take myself that I read this book before. I wanted to read the zone. I said no. Let me see what this man is talking about. This is first book. When I read this book, I started saying that this book now is developing. That's what you was saying, developing winning attitude. You understand? It's trying to open. This book now just opened my head. Like it opened my head. You understand? Because if you check the book, you see chapter right, understanding the mental environment. The market is always right. Why is the market right?
Yes.
You understand? You go to tell all those things inside, and it was helpful, bro. To like, there's something that when you read, you start seeing that, this is what I'm doing. This is the wrong thing I'm doing.
Yes.
To make you discipline, and to make you have less pressure. You be that pressure, trading with pressure.
Yes. You're correct. Yes.
I always focus on, because by the time that I lost, you remember when I was losing every trade, the whole of the week I lost.
Yes.
But I never give up. I was still doing this book. The book will tell you.
Bro, do you know I've been on a massive consistent losses for a month. Like it is always kind of, but I am because I already know my psychology. You understand? I already know that this is trading. This is because losses, and just like you say, consistent losses, it affects the brain. Like it affects your being. Like you just be thinking, are you actually a successful person? You'll be asking yourself so many questions. You start doubting yourself. So it is you are like, I think I'll have to read that book, because
what I read in this book, what I understand this book, are just 4 things, or let me say there are 4 things. 1, self-discipline. 2, self-trust. 3, self-acceptance, and the 4th one is self-confidence. Bro, if you have these 4 things as a trader, I want to write down what you just said. So I'll just write it down. Please, can you? Self-discipline, self-trust, self-acceptance, and self-confidence. These 4 things are what.
After self-trust, self-what again?
Which one do you write?
Self-discipline, self-trust, self-confidence.
Yeah, self-acceptance.
Okay. Yeah.
So I tell myself that if I have these 4 things as a trader, then I'll come to the trading now. I'll go to the market now, and try to study the market. So what can the market offer you now? The market can offer you now market structure.
Yes, exactly. The market will offer you market structure. That's true.
Market behavior and market direction.
Yes.
So if you study the market,
yes,
and you know these 3 things, bro, you can track the market.
Can you repeat what you just said again, please? It is very, very.
Market direction and market behavior. If you can study the market and know these 3 things, and that means if you know these 3 things now in the market, and you have all those self-trust, self-discipline, and now, yes, now if you observe now that the two now are in confluence. When you apply the two now, you know that you're not a winner, you're not a profitable trader, and that's what most profitable trader does. They have these 4 things, and they do that, and you understand. So that's how they understand the market. Not that you as a you as a novice or anything now. The difference between you and them is you accepting yourself, like having that self-confidence, all those things. You understand?
That's true, yeah.
And understanding the market, how the market moves.
Because it is from that structure that you understand how the market moves.
Yes, that structure now is the market, like the market behavior. Everything that all this candle, which are market behavior.
Yes, the market
price behavior. Actions. The price actions are the market, because what McDonald's always say, what is market? Market is when 2 traders come together and agree on a particular price. Either one is selling or one is buying. You understand? So either you sell or you buy, you grab as a trader. So the behavior now of someone buying and you now as a trader now selling, you guys now have constructed the market. You guys have formed what's called market.
Yes, that's true. Yes, that's true.
Yeah. So now, for you to know, for you to be able to understand the market now, you have to know why the other guy is selling and why the other guy is buying. So if you know why the other guy is selling and why the other guy is buying, then you understand what is going on in the market.
That's true.
Then you go back to your market direction. The market direction now is what you told us about top-down analysis. Go and study your top-down analysis, and which is very helpful. Since I studied my top-down analysis, I just seen the market very clearly, because whenever I see the dominance are the big boys in the market.
That's true. Yes.
Whenever I trade the dominance, it always go well for me. Like always go well for me, because I trade the dominance. Market direction now is a very good aspect that you have to know as a trader. Then come to market structure, because in those break of structures, you say you break structure to the upside. So you understand? So if you join these 3 things now, if you join these 3 types of market, this type of, according to me, I just call that as type of market. My own side, you understand?
Yeah.
If you just join this 2, or say, this type of market, bro, you're moving forward.
It's true. Especially that market structure and trying to know the dominance, like the people that have the
dominance, the direction.
Yes, that's the direction.
The dominance, the direction. So as a trader, before you trade, you always tell me something that you have to have a reason why you trade.
Your trade needs to have a meaning. You have to have a
meaning.
Yes.
Yeah. So what is that meaning? Is the direction.
It's true. Yes.
You understand? So if my trade has meaning, which I know that is a buy, what I should be waiting for is a demand, waiting for a reaction.
Yes.
To execute my trade.
Yes.
You understand?
Yeah,
so
that's true.
Yeah. So it's very, very helpful to know the direction.
It's true.
So if you don't know the direction of what is going on, bro, you don't know what is happening.
You're just there. You're just buying. You're just clicking buy and clicking sell.
Yeah, you're just clicking buy. So you have to know what is going on in the market.
You have to know what's going on in the market.
Am I to be following up with the big boys? Because when you follow with the big boys, that's when you make money.
Hands up. Like what? Like
I feel that. I feel that. But I see, okay. Sometimes the break of structure is nice, but the directions matters a lot.
It's true. Do you know? Sometimes it does.
Look at this my trade now. The break of structure was properly bullish.
The break of structure was perfect. Like it was too perfect. Look at breaking several structures now. Like it is.
I love the trade.
Yeah, but you lost the trade. Do you know what? I don't know, but I don't know if this has if this is affecting you in real life. But to me, because of trading, and I know that nothing is as real as it appears, and nothing is 100% sure. I don't. You understand? Because no matter how beautiful a trade can be, it is 50-50 to me. It is probability.
100%.
It is probability. That trade might work or it might not work. Simple.
That's what I told you on Friday when I come into the market. I told myself 2 things: either you lose or you win.
The most beautiful setup can be a loser, bro. You see, the most beautiful demand you have can be they can give you a signal candle. You will be selling, they will drop it.
I saw it on Friday. I said on Friday. So on Friday, you showed me that. You showed me clearly.
Yes.
So it was like, yes, you have seen it already.
Yes.
Nothing is perfect.
Yeah.
So you stick to your rules.
Yeah, you stick to your rules. Full time, 100%. You stick to your rules.
No matter how you lose, still stick to your rules.
There's no way. There's no need saying you want to change. You want to tweak it. You want to change it. No.
Because if yesterday, this market was clear because normally SPS was buy throughout this week.
Yeah. Even NAS was even 16,000 something. NAS is heavily bullish.
And you see, it was buy. So when I saw that, I was like, because the reaction was very clear. He formed a doji, which was okay. He made a very good reaction there. So I was like, okay, let me just take it because of this structure by your left. I was thinking that the market, since that place now can still be, you understand, there's a structure by your left, you see, the small structure there by your left. I was like, okay, the market now from there now can be your demand. Not knowing that I could have waited a little, you understand?
Yes.
But I was like rushing the market because the confidence was much.
Yeah.
You understand? I made money on Thursday, and I was thinking that 100% that this market is still going my way.
Yeah. I know. Yes, just like sessions now. You know, when if Asia session, you know, I've actually got the opportunity to trade Asia session, you know, and it has made me understand the holistic view of how the market actually works based on trend. You know, this couple of weeks I traded Asia session for about 2 to 3 weeks. So and before I changed everything. You know, both my trading view time, you know, and all my clocks, you understand, for trading. So I switched everything to Asia session, which is I was using the time of Tokyo. You understand? So and I was just like, I will start trading based on when Tokyo Stock Exchange open, but I will come 30 minutes before the Tokyo Stock Exchange opens. You understand? Okay. So now I usually do analyze my trade 30 minutes. I always like to come to the market before any market open. It is because I want to be there when it opens. You understand? So I mean, like, not actually be there, but at least I like to make my analysis before a session opens. You know, so I will know like the type of momentum that the market is giving at that open. You understand? You know, just to know just the momentum basically. So, and I now saw, you know, sometimes I now saw that, you know, the real trading day starts in Asia session, but though it has a very little volume, then the price action is pretty small. You understand? Like, it doesn't bring all these kind of big candles like that because there are very less traders trading Asia session. So, and I now saw that after analyzing my trade for the Asia session, I will trade it. Then I will now see that on London session around 7 a.m. Frankfurt time, that is Germany time. You know that all Germany and some of the European countries are 1 hour ahead of London. You understand? So they open 1 hour ahead of London. So before London opens, you understand? Yeah. So now I now saw that if the Asia session is kind of quiet and illiquid, by illiquid I mean that not having that kind of volume, Like not
Okay.
like a chart that has volume is liquid. A chart,
Yeah.
I mean, a currency that has volume is liquid. A currency that doesn't have volume is illiquid. So I now saw that it has very little candles with like it is illiquid. So and
Illiquid,
but yes, but and let's say the down went up, like they were trending up towards London session, towards that Asia session until the
Yeah.
beginning of London session. Then when it is approaching to Frankfurt, that's Germany time for before the like 1 hour, you understand, ahead of London. When they are opening, they will start grabbing the highs and the lows of the Asia session. You understand? Then the trend will be shifting a little bit. You understand? Then if you were buying in Asia, you might not be buying again in London, because London will be kind of trying to change the trend or trying to grab the highs and the lows of or the stop losses of Asia session. You understand?
Yeah,
So
yeah.
even the trend that it was following through Asia, because I traded the Asia and I now saw that it is the beginning of the session. It is the beginning of the trading day, the whole day. You understand? So now London will now come and want to change the trend. You understand? Because they need to get some fun. You understand? So that is how they will tweak London. They will tweak Asia. You understand? So now if you're trying to also follow the trend of Asia, you might not know that London is trying to change the trend because Asia was already up, and they wouldn't want to they might not want to continue that up. You understand? They might want to go down a little bit, then so that when New York comes, they might now start to reverse the trend again and start going up. All the 3 sessions must not go in the same way. You understand?
Sorry for confusion.
Yeah.
That is what happened to me on this trade. You see, if you observe now, it is London.
Yes.
I mean, like going to. If you observe now, you see that I was trading towards the New York session.
Yes.
Which was wrong.
Yes, which was wrong. This was London. New York wanted to reverse the trend.
Yes.
Yes. So that was what happened. So all of them must not go in the same way. New York would want to change it. You understand? Each session has its different distance. You understand? So that was what happened. That was what happened.
Well, me, I observed that the problem here was me. I rushed and the time. I wasn't paying attention with the time, because assuming it was at London session, this market is a clear bullish.
Yeah, that's true.
It's a clear buy.
That's true.
That's
true.
The attention, I lost attention because normal. I think it was by 11 I took this trade or something like that, which on a normal I could have waited and rest for the day and do some certain. Maybe cheat, maybe take some drink or something like that, chill a little bit, you understand, and come back for my New York top-down analysis again and follow up.
Yeah,
you understand? So instead of that, I neglected it and I follow up. I said, let me just go, since the market is retesting my zones, I saw them.
Yeah.
You understand? So you understand? So I was careless with the time and I wasn't paying attention, which is careless with the time. You understand? And everything was me that day. I just said that I accepted that it was me that day.
Yes. You know the most important thing for you to accept your mistake. Accept it. You understand, and just try to work on it.
Yeah. It was
there is something that Mark Douglas said. He said, actually, that trading is the hardest way of making money. And the most it is. Yes, people later, kind of become successful. But if you're trying to feel like it will be easy to make money in trading, you are very, very wrong.
It's not easy to make money in trading because there are a lot of things. In fact, number one thing is keeping your mental stability.
Yeah.
Because what is giving you money in trading is your mental.
That's why he said that. To him, psychology is 70%. Your skill in trading is 30%.
Yes, because that's what I was explaining to one of my guys. I was telling him that you can perceive opportunity, but it will be hard for you to execute your trade.
That's true. It will be very hard for you to execute your trade. That's true. Yeah.
Particularly always say the hardest part of trading is execution of trade. The hardest part of trading is execution of trade. Understand? Do you have that mind to execute trade? Do you have that mind to lose $100 a day?
Do you have that mind to lose $500? Do you have that mind to lose 1K? Because you still level up, and do you have that mind to lose $5,000?
$1 million a day. Yes, $1 million a day. Do you have that mind?
Yes.
If you have that mind
to take that loss.
Yeah, that's why I told I do tell people that if you want to tell me that you want to go to trade now, I'll ask you this question: are you willing to lose your money? Are you willing to lose all your money? If you tell me yes, I'll say then be ready to not to lose all your money.
Yeah.
Understand?
Yeah.
You're willing to lose all your money, but be ready not to lose all your money.
Not to lose all your money, because you have to learn how to cut losses, bro. Like you have to learn how to know when it is not working, and that is a whole different type of something.
I'm telling you. So if I mean, ask me how much to trade down, yes, you can trade, but are you willing to lose money? If you said yes, okay, be ready not to lose that money.
Yeah.
Because you're ready not to lose that money, and you're willing to lose that money, and you're still ready not to lose that money. You see that you're open to learn.
It's true.
You're open to learn because your mind will be of two things: either I lose, I win. So you'll be fighting not to lose.
That's true.
But when you see loss, you accept it because you know that this is
you
what
signed up for it.
This is what you signed for. My mom will always say, trade is like Niger bet.
Trading is like gambling, like Niger bet.
I said that. Well, trading is not Niger bet, and it can't be Niger bet because in Niger, people that play Niger bet, you can wake up one morning and place 2 odds. Understand? And you win it.
Yes.
You understand me? Or you lose it, it's depending. But you can't wake up one morning and start placing trade.
No way.
You have to know what trade is all about.
You have to know.
You understand? This is just the small aspect of what trading is. So.
That's true.
Because if you are taking it, trading as Niger bet, because everything in this world, that's every environment are similar. Just that the difference is the English they use.
And the language they use.
And language, because if you come to electricity now, we have what we call generation, transmission, and distribution. If transmission is not there, if you can't transmit, your generation is useless, and your distribution is useless. So if you come to trading now, if you can't execute, your perceiving of this thing is useless, and you can't accumulate profit.
You're perceiving of.
So if you're saying like that now, I can also say okay, I can also quote and say that trading is like electricity. It's like power.
Yes. See, they
say that trading is like sporty bet. I can also say okay, me too, trading is like power.
Okay, I understand your this thing. I understand.
So I was like, I have to tell her that no, it's not this thing. That I know what I'm going for. I know that there's losses. I have seen people lose, and I've seen people who made millions in trading. Understand?
Yes.
So I know what I signed. I know that I can lose my money. I know that I can lose all my money. But me saying that I can lose all my money, I can't allow the market to take all my money.
That's true. You can't. It's a war, bro. That's very, very true.
So she now understand that that what this guy just said now is that you don't carry out for mine. Understand? Because when you mention that when you enter into trading, the first thing that you use your real money and place in trading, it's a no to.
Yeah. That's true. You don't. Yeah.
I've done cut.
Yeah.
So you go out from that cut this thing, because bro.
Yeah. That's why I said, see, that trading is like cult. It's just like a secret society. Like you just be
because
it-
it's
it-
you having that mind, and I understand it's all about yourself. You understand everything. You. The market will become like you. But what my brother is just saying, all this blah blah blah, is saying in all those books is you.
It's yeah.
You,
Because
like,
it's just
give yourself.
it is just a psychology. It's just you.
Yeah. So the only simple way I can define my particular book is you.
That's true.
The only thing I can define my particular book is
You are very correct.
So, you is the person. You is the thing that can give yourself money. You is the thing that can give money to the market. The market is there, open. You can perceive opportunity. It gives opportunity.
It gives opportunity. He said endless flow of opportunities.
Endless flow.
Endless flows of opportunities, bro.
He talk on disciplined trader.
He said it on
Endless
disciplined
flow.
trader. Like it's an endless like
The market gives endless flow. The opportunity is too much.
opportunity is too much.
I think it's part of his topic in this place. Let me see it. This endless flow that you just said now, I see it's a topic, like all a topic on its own. That the market gives okay, price are in perpetual motion with no defined beginning or ending.
Price is in
It's in perpetual motion
yes,
with no defined beginning or ending.
that is true. That is true because if you or ending because if you are trying to take a trade, why not wait? There will still be the market will still be open tomorrow. So if you don't see a setup that you are comfortable with, why taking the trade? Because
That's
since you know that it will still come out tomorrow.
Yes. But that ever the fear of missing out.
The fear of missing out, bro. The fear of missing out.
So that's why the psychological book is there for you to read, to understand what is going on. You understand? Because if you have that psychological book with you, if you read those books, you know that ever you suppress your fear. The fear is there. You can't take away your fear. But what you are doing is to suppress the fear.
That's true.
If
The fear is there.
if the fear becomes you will start having problem.
That's true.
So don't allow the fear to be you. You understand? Allow yourself to flow with what you see in the market.
Price action, bro.
Flow with the price action. Flow with the dominance.
Flow with the dominant. Flow with the
telling
market.
you.
Just flow.
Just flow. The market is there to provide opportunity, give you everything you want, all the above. According to the direction, it will give you. Your own is just to perceive the opportunity, execute your trade properly, and wait for a good result. Lock up. The next day you continue.
The next day you continue your trades, bro. The next day you
So no
continue.
ending. Like you can't end it. No ending. You understand? No ending. Beginning. There's no beginning. There's no ending.
There's no beginning. There's no There's something I have on my board here. It says, it was on one of the books I read. Actually, it is 3 different things. So one of them is, it says that we are always looking for signs of what the big boys are doing.
Yeah.
At significant areas, and if we don't see what they are doing, there is no trade. I will read it again. He said we are always looking for signs of what the big boys are doing at significant areas. That is, at significant areas might be at your demand, at your supply, at your if you're trading divergence, if you're trading support and resistance, if you're trading anything that is working for you. That is key levels. And if we don't see, that is the trader, and if we don't see what they are doing there is no trade. Like if you don't see, based on your own strategy, based on the way you trade, if you don't see that's convincing something for you, or if your mind start telling you that this is wrong, then there is no trade. So another thing is that here says there is absolute order in the market. Nothing at all happens by chance.
At all.
I mean, there is absolute order. There is absolute order in the market. Nothing at all happens by chance. Like nothing is happening by chance.
Yeah.
You understand? You have to follow the order. You have to follow the higher highs and the higher lows, the lower highs and the lower lows. It is just the absolute
Okay.
order of nothing go just come. You say, okay, we are now buying. Why are you buying when they are selling?
That first thing you say, that first one you say, just define market direction. That first thing that I just said now.
Yeah. We are always
Just
looking for the
market.
signs of what the big boys are doing at
Yes.
significant areas, and if we don't see what they are doing, there is no trade.
Yes. So if you don't know the direction of the market, don't trade.
Don't trade, just leave it. No
Just
trade.
That is the simple definition. It don't define market direction.
Yes.
You
Once it's
understand?
not there, there's no need trying to trade
You
it.
don't need to trade. You understand? You don't need to stress yourself in trading again.
That's true. That's very
So-
correct.
So it's very, very like everything that you see in the market is correct. You understand? Because market must do something. Either they grant liquidity, they break structure. What will you hold the market for? Like what do you think you hold the market for?
Where are you going to see it and hold it? Bro, you don't swear on your laptop and just have tears ever dropped from your eyes before?
No. That time I was losing back to back. I was like, man, what is going on?
What is going on?
What is going on?
Bro, they are like stand strong. See, we are traders, we are soldiers. Like we are soldiers of the market.
Well, right now, that's what I told you on Thursday. I made 200 profit. Sorry, 100 and something profit. You understand? That's
Yeah.
on Thursday, which I made a profit. You understand?
Yes.
But I said no. Let me take it on Friday. I took it on Friday. I lost 60 something dollar, which my equity later become equal to the money I deposited.
Yes.
You understand? So I said, okay, let me take a trade again. So the market that trade
You are
I
trying
took
to
was
revenge trading. Were you trying to revenge trading?
Not that I saw a my setup, which I took, but not at the right time.
Yes.
I took it at the wrong time.
Yeah. You know, one thing about Forex too is timing.
Time, yes. So as I took the trade, it gave me $78, which I could have accepted. I said no, let it be 100, so that I can be able to cover up
For the
with
loss you made.
I made.
Yes.
Yes. So the market took me out, and
And you lost more.
Now I lost $68. So I'm in loss, which to me I could have said, okay, since I lost that $70 and the market gave me equal what I deposited.
Yeah.
It's something I'm saying, okay, and let me end the trade for the year. You know, because normally I told myself on Friday I'm ending, even though I win or I lose. I made up my mind, you understand? So, but I still turn out as a loss, which I still stick to. I'm still sticking to that that law. That is like please that I'm ending it, because at least let me use this opportunity and see what I can gather a little money.
Yeah, and work
Since
on
I'm
yourself.
holiday.
Yes.
And work on myself 100%. But it doesn't stop me from coming to chat after work.
Do you know that one of the most important things in trading when growing in trading is screen time?
Screen time. 100%.
The time you spend on the screen, your screen time. You have to be plugged in on the screen.
I'm telling you, this is what improved me. Let me not lie, because I have to find means. No, I can't just be losing. Even that when I was losing, I have to ask you what time frame do you trade? Tell me 30-15 minutes. I say if my boss is 30-15 minutes, me that is coming strong than 35 minutes. 5 minutes was giving me win that time. You remember when
Yeah.
You understand?
Yeah. I know when you were smashing it now. Yeah.
I was like, I don't be senior, I don't be professional. So when they took me back to back.
Yes.
You understand?
Yeah.
Then you keep telling me that, bro, don't give up.
That's true.
Part of the process. Part of the process. You understand?
That's
Then I
true.
keep motivating myself. Then instead of the thing to make me now not to be reading, the money I have, I'll just go to Amazon and get one book like that
Yes.
and start reading. I thought, okay, my lose that we will kill ourselves. Like that. Then when I came back to 15 minutes, I have to study 15 minute chart because the when I was doing demo, I was dealing with 15 minutes. You understand?
Yeah.
So I have to but I said, okay, 15 minutes always one candle now can give you like 10 pips.
That's true.
But what will make me now enter earlier? So that even though it's 5 pips or something.
Yeah. So that you make before the
Yeah, so that's when I think about Fibonacci retracement. And I see that Fibonacci retracement can help you when it is confluence with my Fibonacci replacement. I use it to get my demand or supply. If I tap it from this, you understand?
Yes.
It will give me a supply, and the supply is valued. Whenever I see a red and a green candle, an aggressive buy or aggressive sell, then I draw my Fibonacci. My Fibonacci now is giving me my demand or supply. You understand? So the Fibonacci demand supply now, then I'm waiting for it to tap in my 0.7. Then when it cross that 0.6, that's when I'll place my trade. So that 0.6 now will make the stop loss less. You understand?
Yes.
It's not be that 10 pips loss size again. It should be around that 5 pips, 6 pips, 7 pips, 8 pips, lesser. You understand?
Yes.
So that's when I'll be comfortable now to place trade. Even though I lose that trade, I lose lesser amount. Not the one that I'll say, okay, wait for the candle let him cross and break that
the signal candle.
Yeah, that confirmation candle.
Oh, yes.
So then, but what based on the study I studied the chart, I noticed that if you break that 0.68, it's 100% breaking the confirmation candle.
Yes. That's yes.
Especially you know when you know the direction of the market too.
Yes.
You know that when you just see a demand.
No. It's when you know the direction of the market. Yes. There is what they told us at London Academy of Trading. They said, one of the lecturers said, you have to always know what you are trading.
Yes.
Like you have to know what you are trading, and it is always good to know what you are trading.
I think before I started using this setup I'm using now, if I start using this one I'm doing now, I allow it for 3 trades to run. I'm watching the trade as it's running, but I'm not taking it for 3 trades, and I see that it made the same thing. So from there I started taking that trade, and as I start taking that trade, I follow the direction. I take it that way. It goes good for me. You understand? So I say, okay, I think this particular setup now is a setup that I'm comfortable with. 15 minutes should be a time frame that I'm comfortable with. You understand? Because 15 minutes is very like it's always clear.
To me, 15 minutes is actually the truth time frame. It is the truth time frame.
And it always gives a lot of opportunity there.
Yeah.
You can get like 20 pips in 15 minutes, 30 pips, 15 minutes.
I like 15 minutes. I like 15 minutes though.
And 1 to 2, which is like 10 pips. Because if I can reach 5 pips, I should be willing to get 10 pips. You understand? So it's always like the thing. So what I do is I plan after I plan that 15 minutes. I plan, okay, I want to be my stop loss will be lesser. I don't want it to be much, so I have to use Fibonacci to reduce my loss size.
Do you know this thing you are saying? Like you are very very correct, and I'll also confirm it with what Douglas said in a passage here. He said, if you ask me to distill trading down to its simplest form, I would say that it is a pattern recognition numbers game. It is a pattern recognition numbers game. Like pattern is, it is always like you are constantly seeing that thing. Like you are constantly seeing that thing. You understand?
For me to accept that trade and trading, if you observe, if you check down Discord, you see that most of the trading they look alike.
Yeah.
Most of my trading they look alike. Look at it, you see that they look alike. So And I was like, okay,
And
see,
that's
they look
a
alike.
pattern. Yeah.
That's a pattern. You understand?
Yeah.
So I was like, okay, this is since I know the if I know the direction of the market, then why am I not confident enough to take that trade? Even though I lose, I know that I follow up what the market told me.
Yes.
And you'll be kind of yes, because you're trading for professionals.
You are trading against professionals, bro. Like you are trading against the most sophisticated people, the most experienced people in the market. Like you are trading against them.
I told myself, for you to be a professional, you have to think, feel, and act like them.
Like a professional.
You have to think.
You have to vision yourself like your new version of yourself in
you feel like you're a professional. You act like a professional. You think like a professional. If you can't do this thing, bro, you can't be a professional.
It's true. That's true.
So that's what I told myself. I said, I want to be making money in trading, but I want to do it in such a way that it is based on the pattern, what I see in the screen, not the money.
Yes, trade what you see.
But I'm trading what I feel that is for me that day.
Yeah.
You understand? So if I can get what is for me that day, then I'm okay.
Perfect.
You understand? I don't want, because not that I can't find means to be making 100 pips a day, but I want to make it in such a way that tomorrow is another day for me to still make
tomorrow
money.
Is always another day.
Tomorrow is always another day for me to make money. You understand? So that's why I have to get what the market can offer me that day. Wait for tomorrow, execute my trade again, accept money the market will still give me. You understand? And that's how I become a trader. You understand? I cannot be a trader because once you get 100 pips, and when you get 100 pips, then they will call you a baddest trader.
They will call you the baddest trader. Agba entry, sniper entry.
This guy, trading addict, that guy, like for new, for people who are still learning trading, like me, I keep watching the guy. Trading addict is more of psychology. He's very good. The guy is good. He trades supply and demand too.
Yeah.
Trading addict. And when I started watching, the guy kind of changed me based on my psychological aspect too.
Yes.
He was the guy that was exercising on that market direction too. After you see that thing,
yes,
the guy was using that market direction. Top down, you understand the guy thing.
Yes.
So the guy is very good in psychology, very very good. So they can also go through that one because I also watch the guy to see what is going on. Understand? So I think I tell the guy, you have to be a professional in this game because the guy, the trading addict will always say it's better for him that someone told him that you don't want to be the best trader in the world, but you want to be the most disciplined trader in the world.
I swear he will be the most successful if he's the most disciplined.
You don't want to be the best trader in the world, but you want to be the most disciplined trader in the world.
That's wisdom.
That's
wisdom,
but
bro.
The most disciplined trader is automatically the best trader in the world.
That's true. 100%. 100%. So it is not an easy task.
It's not an easy task. Not easy task. So for you to be successful, for you to be the best trader in the world you're looking for, you must be disciplined. Discipline is impact. Discipline is the father. Discipline is the overseer.
Is the overseer.
The overseer. Discipline. If you don't get discipline, bro, you're going nowhere.
Bro, you are going nowhere. If you are not disciplined, you are going nowhere.
My motto will always be good discipline, greater reward.
Which discipline? Greater reward.
Yeah, good discipline.
Good discipline, greater reward.
Greater reward.
That is a perfect motto. I like it too.
Good discipline, greater reward.
That's true.
But when you have a good discipline, your reward is big. It's great.
That's true.
Understand? True. I was like, and this Forex really, this journey I took now really is helping me because
it will help you actually discover yourself.
Yes, it really helped me because I'm this kind of person. I've never put much interest on something the way I'm putting now. Because
yeah.
I still remember when you always say, since this your school, they give you strength like this. Almost make this for your life. I thought that was your life.
I swear, attack him with your life.
Almost, everything I don't do now.
I swear. Don't worry. You know. On this setup you took right now, if you look at it now, you will see that you actually provided liquidity for the market.
100%, it's true. Good.
So you were among the people that gave them money. You know.
See, understand something there.
Yeah.
Understand something. By 8 a.m. You see that place that I put my bullish, like my demand.
Yeah.
By that 8 a.m. If you check that green candle, check that green candle.
This one.
Yeah. No, that one. Yeah. If you see, it's by what time? Okay,
I think it's by 8. It's by 8. This is 8 a.m. London
by
time.
8. This candle now is by 8. Which
Yeah.
I saw the opportunity to take. But I was like, no, that the aggressiveness of the buyers there was a kind of too low for me.
Do you know what we are doing? You are trying to convince your inner self know that you don't want to take it, but you are trying to convince yourself to take it.
Yeah.
You already know that it might or it might not work. You understand? And you know, but yourself, like it is. See, like to me, like our inner self is our greatest fight, or like you'll be fighting with so many things.
And again, you see the market was making support.
Yeah, and the market was actually making support around here. Yeah.
Which is still a good trading for me. But I was like, my inner self was saying, no, this trade, it might go well because of the support, but this is not what you're trading.
Yeah, it was bouncing.
Yeah.
Bouncing. Yeah.
So I was like, this is not what you're trading. Because assuming it made a very good aggressive buy for me there, I'm taking that trade.
And it
So it didn't make that. But so I was thinking that maybe it might just go up a little bit and strike down. So I said, okay, let me just wait for a better entry. Which I was waiting for a better entry, then which is this one, and it took me out.
Yeah.
You understand?
Yeah.
So that's why Doyle will tell you that it is the trade that has the highest risk that can give you the money you're looking for.
It's true. It
What are you looking for? Yeah.
So this one now, the trade that has the highest risk. Yes.
Yeah. So this candle now, this one now that has the highest risk that I could have taken, which is still based on my strategy, is still correct because it's a buy. So the support is still buy.
Yeah, because you actually paid the reference to this support here.
Yeah. So I was like, okay, but I said no, that I wanted to fall in my demand zone.
Yeah.
So I created a demand zone, which I later I said it's not all demand zones are zones.
All demand zones are not the real zones.
Not all demand, not at all.
Yeah.
Not all demand zones are zones.
That's
so this is a clear explanation of what is written down. it's a demand
From
zone.
the textbooks.
It's a demand zone, but it's not.
But it's not a demand zone. That's true. You know, you already know. Yeah, we are not hearing you again. Hello. We are not hearing you again.
You understand? So I was like, wow, the market. You understand? So by 8, the market gave me what I analyzed. I analyzed the buy.
Yeah. And it's actually gave you the buy. Yeah.
The relationship gave me a buy, but I never paid attention to what I saw.
Yeah.
Well, I didn't calm down to pay close attention.
Yeah, and also it has been trending up almost throughout Asia. and London.
Asia,
And New York will not want to continue that. The market can't continue going up. So they wanted to, you know, at least to reverse the trend. That is what New York session always does.
Yes. New York changed.
Yeah.
So
New York changed the trend.
You see that my directions. I know what the market is about to do. You understand? But I execute the trade wrongly.
Yeah.
At the wrong time.
Yes.
I didn't time myself because another thing to do is timing. You have to time yourself.
You have to time it. Yeah.
From the time of the trade.
Yeah.
That's why professionals are always good because they know how to time themselves.
That's true.
As a novice, you may perceive opportunity, but the timing spirit is not there. You don't have that timing. Because timing is another strategy you have to learn as a trader.
Yeah.
Timing is another strategy you have to learn as a trader.
Time.
You understand?
Time is of the essence.
I'm telling you. So if you can have your strategy that is working, but if you don't have a good timing, you'll be losing.
True.
You'll be losing very, very well. So that's one of the things I have to improve in myself too is timing.
That's true. That's true. Because
Because
if you don't know the time,
I remember when you told me that you do make small mistakes, just small mistake. You do make little mistake, just that little mistake. You understand? And that little mistake is one causing me some losses.
Yeah.
Which I have to amend. That little mistake
those small mistakes that you don't pay attention to, they are the biggest mistakes.
Yes, it's not a very big mistake that is too clear, but you lose big.
Yes.
Because if it's a mistake that is clear, that means you don't know what you're doing.
Yeah.
You understand? But that's so be anxious because sometimes I may take a trade which I know that is very like me, I'll take it as 100% sure. You understand? It's going my way. Then when you like start reversing, I'll start losing. You understand? Then I'll say, okay, there's a supply upset which I did not pay attention to. You understand? That's where the market made its reaction and went down.
Yes.
You understand? Like that Friday, I didn't pay attention to the supply there.
Yes.
Which people was telling me, okay, this $78 I'm giving you, collect it.
They go collect more. Yeah.
Like, no.
This side, yeah.
This market is going to my side.
Yes.
The market is going. But which I was still happy to see. Because at least it showed me a lot of things. It showed me a lot of things.
That's true. Well,
so if you check this trade now, you see that it's $38. I just placed 2 entries to make it $140.
Okay.
Make $140. Well, that's the way I want it now.
You don't go that way, but no problem. We are going to make a class on liquidity inducement. You understand? Because you actually would like traders to lose, like, you know, I've forgotten where I read that there are a term that is described as informed traders. You understand? And uninformed. Okay, I think that was when I read about Wyckoff method. That was the book I saw on the Wyckoff methodology. Let me find it. It was on this book, on this Wyckoff. So it's about it talked about the informed and uninformed traders. You understand? So you have to wait for the uninformed traders to take a loss first before you trade. You understand? So you have to make them you have to wait for them to provide liquidity. You understand? So for them, so that they can add money to the market. So that inducement is what you have to build on. You understand? Because the inducement is just a fake out for uninformed trader, hoping that the market is already going up. You understand? Why they will still come down, take them, and then go up. You understand? Or 100%. That the market, or they will feel or perceive from their analysis. Their analysis will be correct too. Everything will be correct, but they will take a loss, and then the market will not go their way. You understand? So that process of doing that is called inducement. So we are going to have a very nice and a very nice separate class on that. You understand? I will talk about inducement there like perfectly there. You understand? So that's just it. Yeah. So I think we might be ending this lecture here. See you guys.
I don't know what more.